So now let's move into part two. We've talked a little bit about the differences between a sole proprietorship and a corporation and things to keep in mind, how life will be a little different for you as a business owner, having a corporation. So why would you want to make this transition? Why would you want to have a little bit more complication in your life? The time needed to make some additional decisions that you didn't have to make before. Well, as we said a moment ago, there's a small amount of time and investment needed for a very large benefit. So let's talk about what we mean by a very large benefit. So some of the advantages, a key one is tax. As you can see from our picture here, there's a well-known saying, it's not how much you make, it's how much you keep, right? If you think of the time that you were an employee, your gross pay was not as important as your net pay. So your net paycheck is what you could do something with, not your gross. And so what you're really interested in as a business owner now, having your own business, is what are you left with? So for example, if you make a high revenue number, but you have almost as high an amount of costs, your income still is going to be low, isn't it? So one of the largest costs that a sole proprietorship has is income taxes. Why do we say that? Well, as a sole proprietor, when you file your personal income taxes each year, if you're in Ontario, for example, it could be as high as 52% of every dollar personal income tax. 52%. In a corporation in Ontario, on the first $500,000 that your corporation makes, the tax rate is around 12%. Now compare 52% with 12%. We can do the math, can't we? So there can be up to 40% tax savings if you were to withdraw the money out or leave the money that you don't need in the corporation. Whatever money you don't need to live on, if you leave it in the corporation, the first thing to remember is you can pay up to 40% less tax on that profit if it's left in the company. We would suggest that 40% of every dollar of profit is a huge number. And so it's something that you should consider the value of having a corporation. And if you're a small business owner, and remember the theme of our webinars is how to grow your business successfully, what could you do with 40 cents of every dollar of profit, having that remain in the company? Think of the equipment you could buy. Think of the staff you could hire. Think of the systems you can put in place. Think of the professional advisors and other experts that you could draw on and have the funds to remunerate them so that they help you. Can you see the advantages then of having a corporate structure and having these tax savings that you can reinvest in your growing business? So that's one key advantage of having a corporation in a tax way. Secondly is a tax deferral. If you're a sole proprietorship right now, you know when you file your tax return, your income taxes on that profit is due, isn't it? June 15th is your filing deadline every year on the total profit your business made if you're a sole proprietorship. And so that personal tax bill comes due every year on your total profit. Well, in a corporation, it's different because you will only pay personal taxes on the money you take out of the corporation each year. And you get to control how much money you take out of the corporation each year. It's your choice. There are different factors to think about, and that's how a trusted business advisor helps, but you're in control. And so your personal taxes can be as low as you want it to be, dependent on the amount you take out of the corporation personally. So what a huge tax deferral. Think of the fact that you may take only a certain amount out each year, but your profits in the company are much higher. And think of doing that year after year after year, just taking out of the company what you need to live on and leaving the rest in the company. Can you see year after year, like our illustration shows, that accumulated tax deferral, you're going to have more and more and more money to reinvest in your company. And it could be 10 or 20 years from now when you will start to draw on that money personally. But think of all of the good that money can do in the company until you take it out personally. So there's a huge tax deferral when you have a corporation. And third, tax planning. So as we mentioned earlier with a sole proprietorship, there isn't a lot of choices. However, the amount of profit is in the business come December 31st, that profit is going to be taxed personally on your personal tax return. But with a corporation, you can decide if you're going to take out salary and put yourself on payroll. Or maybe it's better for you as a shareholder to take out dividends. Or maybe your trusted business advisor will say, take some of both. Can you see that there's benefit in having a trusted business advisor involved in this decision-making process, helping you work through the factors, the choices, the options, so that you get the best tax result possible? And so your trusted business advisor can work with you to customize a tax plan that's perfect for your particular individual business and family situation. You don't have these types of choices in a sole proprietorship, but with a corporation you do. And then there is the area of preserving your personal assets. So which should you consider here? Well, as we mentioned earlier, a corporation is like a separate legal entity. It operates on its own in the marketplace. As a shareholder, you control it, but it's its own separate legal entity. So what does that mean? Well, it means that if something unfortunate happens in the business, maybe something your business did through yourself or an employee that had a negative impact on a customer or a client, or one of your customers had an accident on your property, and so on. As we know, there can be legal claims put against a business. Well, with a corporation, those legal claims will likely be limited to the assets that are still in that corporation. Now, it's true you can have insurance, but wouldn't it be better to have a corporation where you know that there is a cap on the assets that could be affected to pay out in the case of some unfortunate event? So by having a separate legal entity in the form of a corporation for your business, generally speaking, all of your personal assets are preserved and are not at risk. So your house, your car, your RSP, your other investments, these will not be at risk because of a potential future business event. And doesn't that add peace of mind to you as a business owner? And so that, we feel, is a very important advantage of having a corporation. A fifth one is market presence. So maybe as a sole proprietor, you've started your business, you're in business for some years, and it proves that you're successful. You're doing well. You're able to attract customers. But what we have often found in our experience in speaking to other business owners is business owners often view a business that is a corporation as more stable. Now, that often can simply be a perception. But when it comes to marketing, aren't you interested as a business owner to put your best foot forward, to create the best impression, that first impression on a potential customer, potential prospect? And so often, customers, clients, prospects like to do business with a corporation. They see it as a more established, more stable business operation. They feel often that there's been some additional planning put into the setup of the corporation and the business in the first place. So by having a corporation, it can increase your market presence that you can have attracting your ideal client. Now, there's another advantage to having a corporation, and Leanne, can you tell us about it?
Absolutely. Okay, so yeah, our 6th point here, there it goes, timing is everything. Sorry. David, I might ask you to take this one.
That's fine. So let's talk about financing opportunities. So imagine yourself as a small business owner and you'd like to expand. Maybe there's a key piece of equipment that you'd like to have. You know that it will allow you to provide another service, or perhaps service a greater number of clients. And so you'd like that piece of equipment, but you just don't have the personal assets to pay for it. And so you're thinking, what choices do I have to get a loan? And often, if you have a corporation, banks and other financial lenders can be more agreeable to loaning you money if you have a corporate structure already in place. We're not saying they will not loan you money if you're sole proprietorship. What we are saying is, in our experience, we have found that lenders are more open to providing financing to help you grow and expand your business if you have a corporate structure in place. And so if you feel that that piece of equipment or that financing for whatever key needs you have in your business, to be able to have that financing, if a corporation will make that possible for you more quickly, then we suggest a corporate structure as an advantage. So those are 6 of many reasons and advantages of having a corporation compared to a sole proprietorship, in our opinion and in our experience.